Hi, everyone. Welcome to today's episode of the Dead Man Walking podcast. I am your host, Repeatedly Dead Fred, author of the soon to be released memoir, The Summer I Died 20 Times, which is actually what happened to me. So that's the name, Repeatedly Dead Fred. Today is part of our finance and small business section, and I'm here with Barry J. Plener, who is the owner of Barry J. Plener Consulting. Um, and he is one of the experts in the insurance business that I like talking with because we all have to have life insurance or health insurance, and there's some ins and outs that people need to know about. So, Barry, nice to see you again. It's been quite a while.
It's been a long time, Fred, and it's always good to see you.
Thank you. Um, when I asked you to be on, I was remembering how we first met at Canada Life, and which was back in 2002, 2003 ish, I
I
think.
would say it's prior to 2003, probably closer to 2001, 2002-ish.
Hmm. And my boss at the time, Ian Jack, said, Brad, you need to go start, meeting all the uppity ups and the big shots in the company. So start making appointments with them. And so I sent you an invite for a meeting, and we ended up booking a meeting in that sort of building next to the main building,
Yeah,
whatever that
yeah.
was called. And when we showed up and you showed up, he's like, "Why the hell are we meeting here? Why didn't you just come to my office?" Like, I had no idea. You were like 30 feet away. I had no idea. So, so that's my first memory of you. But then, you know, so you were I guess, the chief underwriter at the time.
I was a chief underwriter. I believe it was from probably 1999 until our management buyout in 2003 when I departed and started off my consulting company.
Okay. So do you want to give the people a little bit of a description what an underwriter does in the life and health business?
Absolutely. First of all, underwriter is always mistaken for the word undertaker. In
Yeah.
fact, my mother thought I was an undertaker for quite a few years.
Hmm.
But on a serious note, an underwriter really is the protector of the insurer against unforeseen, I don't want to say unforeseen, more about early claims. So, for
Okay.
example, everybody, believe it or not, has a life expectancy, and that's called mortality. Everybody has a rate of morbidity, which is a health injury.
Mhm.
And it is underwriter's job after the actuaries have priced the products to ensure all risk fall into the same risk class. And if they don't, it is the underwriter's job to appropriate the correct premium to meet the pricing guidelines set out from the actuaries a day of issue. Let me give you an example, which is not in my expertise, but it's a little easier, I find, for people to understand because most people, or almost everybody, certainly that has a license, has automobile insurance.
Mhm.
And we all know that automobile insurance will fluctuate depending on what type of risk you are to the insurer.
Mhm.
So naturally, if you have many speeding tickets, the underwriter would adjudicate the pricing of the product to be a lot higher.
Mhm.
No different than if somebody had a driving while impaired charge. Some insurers may not accept the risk. So in life insurance, we will go through a series of medical and non-medical questions because a lot of things affect the pricing to a life insurance product.
Mhm.
Um, if Fred, the walking miracle, had some type of pre-existing condition, it
Mhm.
would be the underwriter's job to say, do we accept the risk as applied for?
Mhm.
Or can we price the risk accordingly so that we will make profit? Or is it a completely uninsurable risk?
Mhm.
So to give you some feedback in my history, I was once presented a situation in working for a company called Manulife Financial on the US side, in which, and I say the US side because, life insurance has many, many different needs.
Mhm.
And a popular need in the US, it's not always the same in Canada, is that in some states, there's a death or an estate tax payable on a second death. So in situations where two people are married, at the end of the second death, whoever dies first is irrelevant. But at the end of the second death, the government of the state, and it's only in some states, want to be paid, in some cases, up to 50% of their actual net worth payable to the state. And a lot of tax planning consultants, lawyers, accountants, whoever, would get a life insurance policy on a joint second to die product, which is typically a lot cheaper than a first to die because one death, there's no payout.
Mhm.
But what it does is it replaces the economic loss that would go to the government, and then the money would go to the estate, tax free. Now,
Mhm.
that's not my expertise. My expertise is in underwriting, but the story always resonates with me because I had two people with a life expectancy of less than a week.
How does that
So,
happen?
well, they're 85 and 84 years old, and they weren't terminal for cancers, but they would be the equivalent of they're walking on their deathbed, but they would have a
Mhm.
$500,000 tax need.
Mhm.
So I said to the agent, I said, you could speak to the actuaries, but if I was you, life insurance, anything could be priced. We
Mhm.
could price anything. I said, I would issue a joint last to die policy, but the premiums would be whatever the death benefit is, plus the expense of underwriting, plus your commission. So in this case, and I was serious actually, but it's half
Mhm.
joking, but it's actually quite ingenious because so for a $500,000 policy, the premium could have been about $600,000 because of commission and expenses.
Mhm.
And the agent said to me, "Well, why the hell would I do that?" I
Mhm.
said, "Well, because this is not my expertise, as I said, but you would now send us $600,000. Their estate would go from $1 million to 400,000. Now they're under the threshold of paying an estate tax. And when they die next week, you're going to get your $600,000. You're going to get $500,000 back. It only costs $100,000.
Man, Vegas
And that,
wouldn't like those odds.
and the insurer would make their money, but the tax department wouldn't get their taxes, but the beneficiaries would net profit 400,000.
Mhm.
So everybody makes money except for the government.
Yeah. So that's you have to wonder why this agent took so long to start talking to them about this.
Well, it was probably, I was a youngster at the time. I was probably in my late 20s, early 30s, and it also gave me the idea where I thought underwriting could be a business and not a
Mhm.
profession. And that helped me advance into Barry Plener Consulting. So
Mhm.
I try and look at things as a contrarian as I
Mhm.
teach my kids. I like to be the opposite.
Mhm.
Well, most underwriters they think the worst. I try and think how can we make it profitable, and
That's
that's when my career kind of took off.
mhm. So you left Canada Life when we were bought out by Great West, and
Correct.
then probably about 6 months later, I also left Canada Life after we were bought out by Great West, and it was an interesting process. But I really didn't know a lot about underwriting before I came to the company and started working with you and your team. And you had a really excellent team there, by the way.
I'm
Um,
very proud of the people that were a part of my team. They're very hard, loyal workers. And I like to say they try to think outside the box. So we were definitely not known as the policy prevention department, as most life insurance agents would recognize underwriters.
Yeah. So now I know in your consulting role, you're often called as an expert witness to help, I guess, is arbitrate the right word? Whether
Well,
policies should be.
I think the right word is to provide an opinion.
Mhm,
I don't arbitrate. I tell it the way it is.
mhm,
I like to believe I'm telling and providing an opinion. And then if everybody knows the opinion, I think that will help for mediation on whether the lawyer or the client ultimately think they have a very strong case or a very, very suspect case.
mhm,
But as an expert, full disclosure, we are hired by lawyers.
mhm,
It could be for the plaintiff or it could be for the defendant. But our oath really is to the courts, even
mhm,
though we are paid by one side or the other. We're signing a commitment that we are providing an independent evaluation or an independent opinion to the courts,
mhm.
a non-biased opinion,
That must
naturally.
be pretty fairly difficult because underwriting standards, probably a lot of them have changed over the years, and companies have their own uh, niches, I guess. So you have to become familiar with all the ins and outs of a whole bunch of different companies.
That is true. I used to refer to it as lost leaders, like you're seeing bananas for sale in the grocery store. That one
Mhm,
company had a sale on bananas. We might be, I don't want to say a sale, but we may be more aggressive at underwriting diabetes, or we may be more aggressive in underwriting impaired drivers for that matter. So every
mhm,
company certainly has their niche market. But when you say it might be difficult for me, as an expert, the law, at least in Canada, and
mhm.
for sure every province. Typically, there's two sets of laws, and one Quebec is a little bit different than the nine other
Of course.
provinces or territories. But for the most part, the law would state, not verbatim, but it would state, had this information been known by a reasonable insurer, a reasonable insurer could be any insurer.
Mhm,
Had this been known at time of underwriting by a reasonable insurer, would a prudent underwriter have approved this case as applied for? So
okay.
having said that, if a company is not aggressive on diabetes, but there was a company out there that was aggressive of diabetes, and you always have to refer to evidence of proof.
Mhm,
And our evidence of proof, which is basically our Bible, are the underwriting manuals, which have guidelines.
mhm.
And I would naturally refer to my opinions based on what reasonable insurer would have issued this policy. And that's where it would come down to. Naturally, underwriting, if you talk to anybody, they say it's more of an art and not a science.
Mhm,
Having said that, 10 underwriters could look at a case exactly the same with exactly the same facts, and
mhm.
not all underwriters would have the same opinion. And that's good for competition.
Yeah. I remember when I was an agent, and this was with the former Freedom 55 company. Um, and they were pretty strict on people that had had drinking problems. I don't know if all companies were the same because we were only writing for London Life. So they were more stringent, and people that had gone through the 12 steps were furious at those questions because they no longer saw themselves as having a problem and didn't think they should be, dinged for it, or whatever the proper term is.
Well, I can speak to that. but I can't speak to London Life because I really don't
Yeah.
know what their current policy is, nor do I really remember their old policy. But
Hmm.
when we're underwriting people who are, well, let's just call them alcoholics,
Hmm.
or recovering alcoholics, um, it's like anything. It's an addiction. It's no different than smoking.
Hmm.
And the rate of success is always predicated based on time. The
Hmm.
longer that you've abstained from smoking, abstained from drugs, abstained from alcohol, the greater likelihood of success and
Hmm.
the reduced amount of risk to the insurer. So naturally, somebody, and it's been my experience, if there's something out there that's different, please excuse me, but it's always been my experience that most insurers or reasonable insurers would not insure a recovered alcoholic for the first 5 years. And
Okay.
thereafter, say for the next 5 to 7 years, they would assess them with an additional premium.
Hmm.
And then maybe after 7 or 10 years, they would issue them at a traditional standard rate.
Hmm.
But just to give you something in the industry that I think is the newest and certainly wasn't true at the time when you and I together in 2003, my guess is this is around 2013, 2014, are pot smokers.
Oh, okay.
We handled pot smokers or marijuana smokers, and I'm talking smokers by the definition of inhaling.
Hmm.
Because there are people that have edibles. There's people
Hmm.
that use oils. In my experience and my knowledge, and if there's doctors out there that think I'm incorrect, that's fine. But I don't believe there to be any mortality in ingestibles or oils. The mortality in marijuana is from inhaling into the lungs.
Hmm.
Certainly, there's other risk factors. I mean, if you're smoking marijuana and you're driving a car, certainly the mortality is through the roof.
Hmm.
But I'm just talking about pure inhaling of tobacco. In 2013 to 2015, don't hold me to the dates. Up until then, if somebody was using the occasional marijuana, the occasional could be
Hmm.
up maybe 3 times a week.
Hmm.
We were charging them smoker rates.
Interesting.
When 2014 hit, there were some bold insurers out there
Hmm.
that were removing that and issuing them as non-smokers on the reasoning that people were probably one one. It's almost impossible to prove if somebody is a marijuana smoker unless in fact there's a toxicology report, which usually there isn't on a claim, or
Hmm.
there's something in the doctor's records. And so it's very hard to prove. And two is they realize the mortality is not high because people were probably having a joint once a weekend or something like that. And three is it also became legalized in Canada.
Hmm.
So that was the biggest liberalization that I know in the Canadian marketplace. I don't believe it's done that in the US. I'm not on top of the US as much as I'd like to be. But naturally, if somebody was smoking every single day, there is a higher mortality. But again, if you're ingesting, it's no different than ingesting a cigarette.
Hmm.
And the other thing is
So,
vaping. Vaping is, again, you're ingesting, so there's mortality in that as well.
mhm. So I was listening to noted insurance expert Bill Maher the other day, and as you just mentioned car accidents and things, he said during the pandemic, the number of car accidents have skyrocketed.
Really,
So,
my
yeah,
insurance rates went down during the pandemic because nobody was driving.
yeah, but apparently those that were not driving so well. So I don't know if there's a
We had nowhere to go.
yeah. So I loved it during the pandemic for because it was great for bike riding because you could ride
Yeah.
on the streets without encountering almost any cars. Now it's back, especially in Toronto. It's just insane being on the roads.
Well, I try and stay out of the big smoke now.
Mhm. That's a smart thing to do. So, are you able to talk about any of the cases you might have worked on, things
Well,
that
I can't
surprise
talk
you?
about specific cases, but
Hmm.
what I would like to talk about is a subject that probably gives insurers a bad name,
Hmm.
and sometimes is justifiably so. And I like to talk about a topic that gives applicants a bad name, which is sometimes justifiably. As I said to you earlier, I'm an independent witness. I have no pleasure in who wins the case.
Hmm.
I like to say people love me because I say it the way it is,
Hmm.
and people hate me because I say it the way it is.
Hmm.
Sometimes I put an expletive in front of that just for a little more humor, but I
Hmm.
like to tell it the way it is. I like to tell lawyers, I don't believe you have a case. I don't use those words. I would say that in my opinion,
Hmm.
uh, this comes down to what's called material misrepresentation.
Hmm.
Kind of a big word. So, what does material misrepresentation mean, and where is that in the insurance policy?
Hmm.
Material misrepresentation means almost identical of what I said earlier. Would a prudent underwriter, had they known the information at time of underwriting, have issued a policy as applied for?
Hmm.
So what happens in traditional underwriting is an applicant is going to fill out a questionnaire. The questionnaire is going to ask you not only medical questions, it will ask you family history questions, it will ask you about your habits, your drinking, your smoking. It's going to ask you about avocation, skydiving, bungee jumping. And it is the onus on the client ultimately, because they sign the application, but they're helped by the agent to complete this disclosure. The underwriter uses this disclosure to do one of a few things. They may issue the policy based on that disclosure. The applicant may say that they have asthma, and asthma, as you know, could be very mild, could be very severe.
Hmm.
Asthma, obviously, in combination to smoking, is a lot more serious than not smoking. So an underwriter can make a decision to get a doctor's records,
Hmm.
get the doctor's records, and they make an informed decision. Or obviously, they can rate the policy or decline it, as we spoke to earlier. So let's say that, and the other thing that you should know, or your audience should know about an insurance claim, and we're only talking about life and health claims because those are the only claims that I handle. Living
Hmm.
benefits, which are critical illness claims, or disability claims, or death benefit,
Hmm.
which is a life insurance claim. Now, in a situation with a death benefit,
Hmm.
the deceased is gone. So we don't have, or the lawyers don't have anyone to question unless a
Right.
wife or the agent, and naturally they could talk to the agent, but the agent really isn't going to remember much. So there
Hmm.
is no living witness in these situations.
And you can't do like a seance or anything to try and
Well,
conjure them.
we could do everything you want to do, except for the fact the insurers will still take a very defensive position.
Hmm.
But having said that, what is needs to be firstly understood in all of Canada, not the United States, is a little bit different. In all of Canada, the death has nothing to do with whether it's a contestable claim or not. So I'll give you an example. Somebody didn't disclose that they had cancer
Hmm.
and they died in a car accident. The fact that they died in a car accident and they non-disclosed or they didn't advise the insurer about the cancer has nothing to do with the claim. The
Okay.
law says that whether a prudent insurer, and I'm repeating myself, would have issued a policy as applied for. So cancer is a very, very interesting topic. and that might be something that you have on your podcast in the future. But as we all know, the longer somebody survives cancer, their chances of survival are and long-term survival return to a normal life expectancy.
Mhm.
And we all know that certainly a stage 4 cancer, and more often than not, becomes an untreatable cancer. Not to say that people haven't survived stage 4 cancer, but more often than not. So let's just say, for the reason of your podcast, somebody non-disclosed that they had a stage 1 lymphoma malignant or stage 1 skin cancer malignant 20 years ago.
Mhm.
And they died of, you can name the car accident. In this scenario, that would not be a major material misrepresentation on the surface based on just only those facts.
Mhm.
Reason being that even if the underwriter knew and the applicant had disclosed the stage 1 lymphoma or the stage 1 skin cancer, the underwriter still would have issued a policy as applied for.
Mhm.
In this situation, that would not be a material non-disclosure. That would be called, as we call it, an innocent non-disclosure.
Mhm.
And again, I'm not a lawyer, but it's been my experience that the courts would take that as an innocent misrepresentation.
Mhm.
So if I was working on the side of the, or let me rephrase that because I'm always working for the courts, but if I was hired by the defendant, which would be the insurance company, I would tell it like it is. In my opinion, that would be a non-material misrepresentation.
Mhm.
If I was working on the or hired by the plaintiff side, I would say, in my opinion, a prudent underwriter working for a reasonable insurer, had they known this information, would have issued a policy as applied for. Now, let's sophisticate it a little bit more. Let's say it was a stage 2 or a stage 3 thyroid cancer. Now it gets a little dicier because, as you said earlier, some insurers could be more aggressive and some insurers could be a little more conservative. It's always been my experience that Freedom 55 back in the day, I don't know about now, was a little more conservative. Reason being conservative was, which is another show, is because they had a captive agency. So they
Mhm.
could afford to be conservative because the agents couldn't place their business anywhere else.
Right.
In the years of brokerage, which might be the reason why London Life, Great West Life bought Canada Life, was to buy their distribution, which is broker, which means they could shop at the 5 different insurers. And a stage 3 or stage 2-3 thyroid cancer could be all over the map.
Mhm.
Some people would take it as applied for, depending on the length and the grading. Some people wouldn't take it. Some people would rate it. What usually goes on the defense side is they look at their manual and say, oh, we would have rated it, which means that would be a material misrepresentation.
Mhm.
I would look at it, if I was on the plaintiff side, I would look at it both sides, but I would say to the defendant, although your manual may say that this is a material non-disclosure, the industry, according to this manual, would have been more aggressive, and they would have taken it. I don't answer the legal question on whether they're prudent underwriters or not prudent underwriters. I just give my opinion, and naturally the opposite opinion on the other side. If this manual would suggest that it's a material misrep, this manual would say it's not material. And then the lawyers can now speak to the law. I believe it's Section 181 of the Insurance Act, but again, not my expertise, and I like to stay only in my lane.
Mhm.
So that's what it comes down to. So what everybody likes to say is insurers don't pay their claims.
Mhm.
I like to believe that reputable insurers, and I think all the insurers in Canada are reputable. I would never have any reason to believe. I've worked for mostly all the insurers, and I see a lot more from certain companies, but it comes down to whether something is material in their definition or in someone else's definition, and that's why we have courts. And when I say I'm working for the courts, I will opine on whether it's material or non-material, and I will show evidence. Very rarely I will say that I have an opinion without evidence. That would get me into a hot seat, and I don't like to be in the hot seat. Uh, Even though I'm Canadian, I like to be hot in the wintertime.
Mhm.
Just trying to make a little light of it. The other issue, Fred, is material non-disclosure is actually only in the first 2 years of a policy.
Oh, that's interesting. I'd forgotten that. So,
So what happens
Barry,
after the first 2 years?
yeah, we're going to have to take a quick break because Zoom is going to kick me off for a sec. So,
Okay.
if you want to log in again, we'll get to part two in a sec.
All right,
Okay.
we'll do.
Sorry about that. Some bad time management on my part. Um, yeah, the you reminded me of a case I worked on when I was early on my career, and it was business partnership kind of case, and it was going to be far and away the biggest uh, case of my young career. Um, and the son of the owner, I knew him personally, and he had had a series of STDs, and he did not want to disclose them on the policy because he didn't want his wife to find out because you know she would have found out he was cheating him, but she probably already knew anyway. But um, yeah, that ruined a friendship. It's like you come across these things in the business.
The most common in my experience were uh, women who didn't want their husbands to know they were smokers.
Oh, interesting.
You know, yeah,
And
sometimes
again,
they would call us directly, say we cannot put that on the application, but we are smokers.
hmm, so can you do that behind the scenes, or did people do that behind the scenes?
Of course, you can do anything you like behind the scenes, and even after the policy is issued.
Mhm.
Certainly, if the insurer becomes aware of it, then they're going to switch the policy to smoker rates, and you won't have any non-disclosure.
Interesting. Because I remember, I don't remember what the time period was when, if you started off as a smoker after a certain period of time, you could come back and get the rating reduced or taken off.
Yeah, we're just diverting from original conversation, but that's the same thing
Mhm.
as I spoke to earlier with addictions. The longer that you cease, the uh, the better the mortality becomes. In traditional products, and I
Mhm.
say traditional products, that means not preferred products. And in most insurance settings, it's 12 months.
Mhm.
Some insurers could be 24 months, some insurers could be 5 years, but in my experience, it's usually 12 months.
Mhm.
But what we were speaking about earlier was misrepresentation.
Mhm.
And we had talked about an insurer has the legal right to deny benefits in the first two policy years. That means 2 years from the date of the policy contract. Now, every contract has a different definition. Some could be from the date of disclosure, some could be the date of the application.
Mhm.
Because don't forget, there's always options to backdate policies
Mhm.
uh, to deny a benefit. for material non-disclosure. So to take it to an extreme, if you are a stage 4 cancer, the insurance company, and there's a death or mortality in the first 2 years, the policy can be denied for a material misrepresentation. And I think we should all support insurance companies because they have a right to price products accordingly. And if somebody is non-disclosing material information, the insurer has the right to deny it.
So where did the 2-year time limit come from? Like how did that come to be?
As far I don't know why it's 2 years, but certainly it came from the Insurance Act in the section that I referred to earlier. It's either a section 181, 183. Again, it's just from my memory. So if you have listeners saying I'm wrong, please, I'm just doing this from memory. It is in the Insurance Act, but what I think your viewers may want to know is, well, holy smokes. If I live 2 years and a day, well, I could deceive the insurer because they can't cancel my policy, or they would have to pay my benefits if I live 2 years and a day. Well, that may be true. It may not be true. And it gets a little outside the balance of my expertise. What happens, and what is in the policy contract, as well as the Insurance Act, it says, as long after 2 years, it will say something like this, give or take some wording, that an insurer can deny benefits in the first 2 years for material misrepresentation, and thereafter they could deny for the length of the policy, provided that there is no fraud. Now, fraud is a whole different test that is very, very, in my experience, can be a lot harder to prove. Some people can take the position that just material misrepresentation is fraud. Some people take the position that intent to deceive is fraud, which on a broad stroke basis, I'm not qualified to give a definition on pure fraud. I'm qualified to give an opinion based on my experience of reviewing claims, if I would escalate it to a lawyer to see if there was fraud or no fraud for an opinion. I could give an opinion based on my experience as an underwriter, a claims adjudicator, but I cannot ever testify on the legality of something being fraudulent. That's certainly not in my expertise. But having said that, intent to deceive might mean a couple of things. It could be that you went to the doctor's office, you took out all the records that speak to a stage 4 cancer, and then you had them send them to the insurance company. Well, that would be intent to deceive someone. That's what's been explained to me as a possible example of fraud. It could be the fraud that you knew you were going to die, so you got the insurance policy, and that could be intent. It could be perceived as intent to deceive. So in my experience, is intent to deceive. I don't recommend anybody deceive anybody.
Right.
It's been my experience, insurers will always take a defensive position if they see an intent to deceive, and so they should. And so they should. So in those cases, we hear the horror stories about insurance companies not paying their claims.
Right.
Some are true, some are not true. I don't know. Everybody has an uncle, an aunt, or a friend, or a family member that's had a bad experience. And those could be one-offs. It could be perception is reality. I don't know what the truth is. I just try and say it the way I see it on a per case basis. I don't judge anybody for making an error on an insurance application, nor do I judge an insurance company for not paying the claim. To me, is I provide an opinion based on the facts. Had I known that information at the time of issue, solely.
So if you're a policy owner and you think your claim hasn't been dealt with properly, I guess is your first step to find somebody like you and get an opinion, or is the first step to find a particular type of lawyer that would work with or try and work with the insurance company? How does that work?
Well, let's have a definition firstly of the word fairly.
Hmm.
Um, Fairly means to me that it may not be within my expertise. It might be that they're taking an excessive amount of time, or they're not representing themselves clearly.
Hmm.
Let's say, for example, that a beneficiary or an owner of a policy
Hmm.
has been denied benefits, and they don't feel that they were given the proper adjudication or the proper response, or the ombudsman within their company wasn't satisfactory,
Hmm.
which I very rarely find that they provide a satisfactory response, because I see quite a number of their responses. It becomes, in my opinion, a legal issue,
Hmm.
which means the insurer has the onus to prove that there's a material misrepresentation in the first 2 years, or the onus of proving fraud thereafter. I could give an opinion on whether I think it is, and I could give a claimant my opinion. They could forward it to the insurer. My guess is that they would say, "We don't care." I don't mean they don't care.
Yeah.
They they would say, without the benefit of a statement of claim,
Hmm.
I don't think they would give it the seriousness that my opinion has. Now, that may or may not be true. So I have never, since 2008, been giving opinions. Have I had somebody come to me directly?
Hmm.
It's always been via the lawyer. And the reason why I say the seriousness is because I don't really have anything to say that they would take me serious or not serious,
Hmm.
is because when I speak to the lawyers, unless there's a statement of claim, they're really not forthright with any information to a third party. When I say forthright, it means providing the actual evidence that they relied on to deny benefits. And once there's a statement of claim, then all the rules kick in and it's taken a little more seriously. But there may be an insurer who says, "Oh, you know what? Barry Plener's opinion, yeah, he makes a point, and we might give you 20 cents on the dollar."
Hmm.
Or they may give you 100 cents on the dollar. I don't know what their position is, but it's been my experience that without a statement of claim, you've probably exhausted in your appeal to the ombudsman and to the insurance company. And it may be their position. I'm not putting words in any insurer's mouth, that they hope that you go away.
Hmm.
Or they could say that, you know, we will take this seriously. I don't know. I've never had that experience.
Hmm.
But I would assume there's a perception out there that they hope people will go away. I don't know if it's true or not true, and I'm not going to comment on that because I don't know. But I do know that if somebody has feelings of unjustifiably denied benefits, it's always taken more seriously when there's a statement of claim.
Hmm. In your experience, is there a particular type of lawyer that is better equipped to make these statements, or it's just a sort of a crapshoot as to whether a lawyer will take your case or not?
Um, I'm not here to endorse or unendorse any lawyers. that would put me again into a biased position, which I don't want to
Sure.
be. But what I can tell you through my experiences, there's generally two types of litigating lawyers.
Hmm.
The first type of litigating lawyer are lawyers that will work on a contingency basis,
Hmm.
which means that, and you see them on the commercials, you don't pay if we don't pay.
Hmm.
Those are for my experience, mostly personal injury lawyers.
Hmm.
And the reason that I understand them to be effective is because, life insurance benefit could be $500,000, could be $1 million.
Sure.
And people don't have the funds to go against a very, very well protected insurance company,
Hmm.
which could cost litigation of who knows, could be a lot of money. A claim
Sure.
could go up to 5 years. So they might reach out to a contingency lawyer, and they have a fee structure based on winning, which I don't know what it is.
Hmm.
Uh, or there's the litigating lawyers that will charge by the hour.
Hmm.
And that may work out to be a better proposition for somebody.
Hmm.
So the general knowledge as somebody who's a layperson in this would be to interview both to see what is more effective for your statement of claim if you choose.
Hmm.
Now, I've had many times lawyers come to me before they take the case
Hmm.
and buy an opinion off me. When I say buy an opinion, they pay me for my time based on the facts that they have on whether they want to invest their time, because a contingency lawyer is all about time. So if
Right.
they're putting up the funds up front, in those cases they may bring me in at the beginning,
Hmm.
and in some cases I'm brought in a week before they're going to mediation. There's sometimes I'm asked to respond to their expert.
Okay.
But there's one thing I always ask the lawyer. I said, does the other side have an expert? And if they do, then reasonably they have a stronger case. And if they don't, I say, well, that might tell you something. Maybe that
Hmm.
they can't find an expert that will opine according to their what they want. It may mean that. And as an underwriter, we always try and think about everything.
Hmm. And do you
Um,
generally know the other experts that may or may not be going up against you
um,
per se?
90% of the time, I know them.
Mhm.
We're a small group. Uh, I've actually worked with some. Some's actually reported to me. Um, I also do life expectancy reports for the courts, but I do those for personal injury lawyers. Usually for needs analysis. They want to know how long somebody will live,
Mhm.
so they could calculate their future care cost. And interesting enough, my first medical director from Aetna in 1983 usually goes against me.
Mhm.
So I see his name for the first time. We've both come a long way.
Mhm. I know when I first got sick in 2009 and I explored a medical malpractice, which is like outside this realm, um, no lawyer would take me. They said I would have been better off if I had died. And I was
Really
too
nice of them to
functional.
say.
Yeah, yeah. So it's interesting the opinions you get.
Where you can, there's experts for gas station attendants, there's experts for cashiers, there's an expert in every field.
Mhm. So,
But I do have close to 40 years of expertise behind me. I am recognized as an expert in both Canada and the United States. I take it very, very seriously.
mhm.
Um, my my hopes are that when I give an opinion, it's an honest opinion and it helps either side formulate their next move.
Mhm. So I ask this mostly in jest, but what do you take more seriously? Your work as an expert underwriter or your golf game?
My golf game. Being an expert's easy.
Yeah. Unless you're a scratch golfer, do not play golf with this man.
Yeah, there you go. Well, Fred, it's been a pleasure. Have I answered all your questions?
I think so, except for one. If somebody is a lawyer out there that actually doesn't know of you for some reason, and they need to get hold of you to get an opinion, how do they get a hold of you?
Very easy. Barry at barryplener.com. And just so you know, there's only one N in Plener, as my mother said, we were never rich enough to have two N's.
Okay, perfect. Barry, thank you so much. It's been nice catching up with you. And hopefully we'll get out on the course again when you come back to the Great White North.
Can't wait. Be safe, Fred.
You too. Bye-bye.
Bye bye.